Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. IMF reaches staff agreement with Zambia for $185.5 million disbursement. South Africa's jobless rate falls for the first time in a year at 32.1%. Plus, Bitcoin hits a new high, nearing $90,000 as the market cap rises above $3.1 trillion. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodities markets. We see markets are still brimming with activity. We see gold ticked up today, but is hovering near a one-month low while investors await U.S. economic data and comments. And we see spot gold, $2,624 per ounce, 0.2% up. And that's U.S. gold futures. That's also about 0.5%, $2,630 per ounce. And at the end of the day, we still see investors trying to understand certainty. At this point, we know gold is known for, certainty. Investors pile cash into there when they're uncertain about events, but we have certainty now with the U.S. elections. But now we're still at new lows at this point. That's for spot gold. That's from the highs that we've seen so far. Other metals we track in the market there, platinum 0.2% down. Palladium, that's unchanged there, $980 per ounce. And we have spot silver also unchanged. So these ones, just investors trying to understand what's playing out there. Let's get a check on the oil market now. We see oil prices eased today with a disappointment over China's latest stimulus. Then we're also seeing OPEC now cutting oil demand. That's oil demand that they're expecting for 2024 into 2025. So we see Brent futures dipped about 17 cents to $71.66 barrel. Then for WTI, US WTI, that's hovering under the $70 a barrel range. Both contracts had fallen by more than 5% over the previous two trading sessions. We know China unveiled a 10 trillion yuan debt package on Friday to ease local government financing strains as the world's biggest oil importer faced fresh pressure from the re-election of Donald Trump as U.S. President. Then to other stories now, we see the Nigerian National Petroleum Company and stopped importing refined products, petroleum products, and is now off-taking fuel from the Dangote Petroleum Refinery and other local refineries. NNPC's Group Chief Executive Officer, Mele Kyari, disclosed this at the ongoing conference at the Nigerian Association of Petroleum Explorationists, which was held in Lagos. Speaking at the conference, Mr. Kyari disclosed that as at yesterday, the NNPC is not importing any fuel as it now buys from local refineries. The Nigeria's crude oil export earnings that dropped slightly to $12.1 billion in the second quarter of this year against $12.4 billion recorded in the first quarter, and that's according to data from economic report of the central bank. This report also showed that Nigeria's crude oil production within the Organization of Petroleum Exporting Countries recorded a deficit of 308 barrels per day, reflecting the decline in domestic crude oil production at 1.27 million barrels per day in the second quarter of 2024. Nigeria struggled for years to meet its OPEC quota, which has last year slashed to 1.58 million barrels per day by the International Oil Cartel, and this is blamed largely as attributed to persistent oil theft and illegal refining activities in the Niger Delta region. And we see Nigeria's dropped to third position behind South Africa and Mauritius in this year's edition of the ABSA Africa Financial Markets Index. According to the benchmark gauge, which was produced with the support of the United Nations Economic Commission for Africa, South Africa and Mauritius scored 87 and 77 points respectively, with the same points they earned in 2023 to take the first and second positions in the index, while Nigeria lost a point this year, having scored about 65 points in 2023. The report explains that Nigeria's score was affected by high inflation and foreign exchange shortages. Now in its eighth year, the 2024 ABSA Africa Financial Markets Index that covers about 29 countries and evaluated their financial development based on measures of market accessibility, openness, and transparency. And now to our first conversation, we see the Nigerian banking sector has been hit with a staggering 42.6 billion naira loss to fraudsters in the second quarter of 2024. And that's according to the Association of Mobile Money and Bank Agents in Nigeria. This trend prompted concerns about security of financial transactions and the need for innovative solutions. Also finding out why we can't still get money, cash, at the ATMs at this point. We'll also be finding that why that trend is still persists. Joining us for the conversation, we have Dr. Obio Haote, is the acting president, Association of Mobile Money and Bank Agents in Nigeria. Joining me right here in the studio. Great to have you.
Thank you. Thank you so much for having me.
Yeah, so, definitely let's looking at the sector, at this point, quite an interesting report there, even though concerning,
Yes.
at this point, looking at how these fraudsters are still able to operate, in this market. But before we go into that, the ATMs are still empty. But it seems, the POS agents still have all the cash, at this point, regardless. What's playing out there?
Okay. Let me start from the first statement you made that the POS agents still have all the cash.
Right.
That is not exactly correct. Okay. Recently, we just concluded the national conference in Benin City, Edo State. And the CBN was there, and the other stakeholders in the financial sector was there. It was a big conference. And let me quote exactly what the CBN representative said, because this issue came up about the scarcity of cash. In fact, agents said that the CBN has to specifically explain why we can't access cash. So what it means that even the agents don't have cash to pay to their customers. So the truth about the matter is that the CBN representative, I think it was the branch controller of CBN in Benin City. So he said the CBN is doing everything they can to make sure that cash is available to the money deposit banks. But unfortunately, what happens between the CBN and the money deposit banks, and then in extension to the customers, is what we can't exactly explain. Because as you rightly pointed out, the ATMs don't have cash. And the same thing is applicable to agent locations. Right now, as we speak, we struggle to access cash. Even in my own locations, hardly can we access cash. And if you go to a typical bank today to get cash, you cannot get more than 10,000 in many banks cash. However, I think one of the reasons is because we are preaching cashless society. We cannot be preaching cashless and be encouraging people to do a lot of cash transactions.
But we should still have some level of cash transactions.
However, the extent of scarcity is something that is giving us concern. Okay? Then many of the agents have resorted to several ways to ensure that at least they still have little cash to service their customers. And some of these ways include having certain collaborations with other financial entities outside the mainstream financial institutions. So that is the situation on ground.
Right, and I'm wondering, I'm trying to imagine a scenario where, the banks, the ATMs at the banks, start, giving out cash again like before, like before now, and, there's people have more access to cash. Who loses in that scenario?
Of course, the customers of the banks are the people that are losing. And then
if cash returns to the ATMs, like now I can go to the ATM.
Okay, if cash returns to the ATM, who loses?
Right.
Who loses? I'm sure you are not implying that it's the agents that loses.
I'm trying to understand who, in your opinion.
If cash returns to the ATMs, everybody gains. I think it's a win-win situation. Nobody actually loses. Okay? So, but at least I remember I have been an ATM custodian myself as a banker when I worked in the bank. Okay, I remember in those days we used to even kind of plead with the customers to go to the ATM. But these days, the customers actually will be queuing in the ATM and there will be no cash to pay them, okay? So I think it's something we really need to work at. That is in collaboration, both the CBN and the money deposit banks. Now, the agents, that is our people, have tried to at least bridge the gap to a reasonable extent. In those days, you go to the bank, you see a lot of crowd in most banking halls, looking for access to basic banking services like withdrawal of cash, deposit of cash. But now agents have taken up that role. So the banks need to step up, okay? At least make cash available. Just like we pointed out in the report we gave, over 300 local governments in Nigeria lack bank branches. Over 300. In fact, in many states in Nigeria, you can only have banks in mostly 2 local governments, the state capital and then one other local government that may be the commercial capital of that state. This is true. If you check so many states, I can give you examples, okay? So now, who are the people that are bridging the gap in some of these other local governments where there are no bank locations? It is the agents that are doing that. So the banks should step up to encourage the agents, at least by making basic services available for the agent, or the tools like cash and some other things that the agents need to make this. Otherwise, by the time if the agents are not able to continue bridging the gap, then the pressures will return again back to the bank branches.
Right, and I've seen some debates, on social media. Some say, maybe because the ATMs were not profitable, for the banks.
No. Like I told you, I've been a bank staff, okay, and I know so much about the ATM. I remember in those days, my branch ATM alone makes profits in excess of 10 million in a month.
And how much were the charges at that time?
The charges, okay, for honest transactions, right, then was free, but for not honest transactions, that is for customers, sometimes I think it was about 30 naira. At a point, it get up to 50 naira and thereabout. I don't know what it is presently. But definitely, most ATMs are profitable. It is a profitable venture for banks. It is not as if the banks are losing by putting the ATMs there.
Because it's quite strange that they'll just let that business go. That's the banks.
Like I said from the beginning, somebody has to explain to us why. If you come to most of the banks, I have some of the bank managers as friends, okay? They will tell you, in all honesty, that they don't have cash, okay? They don't have cash. And I remember even in those days where customers, like when I was a banker myself, sometimes my branch, we don't have to go to CBN to bring cash. All we do is to take cash to the CBN, okay? Because we have a lot of customers that feed us with cash. But these days, you hardly see a bank branch that operates that way. Almost everybody is looking for cash from the CBN. So one begins to wonder, where are all the cash going to? So it's
and this all started, with the former leadership, of the central bank. But it still seems to persist, under the Cardoso leadership. What kind of conversations are you having about that?
Okay, as an association, because I will just say the much I know, as an association, having access to cash is of very high importance to us, because that is number one key, access to financial services if you are trying to deepen financial inclusion. So we have tried our best to engage the CBN and then some of the deposit money banks within our locality, okay? So, but for the extent we have gone, I have seen that many of them are really sincere in trying to make sure that cash is available. But then when a bank cannot access cash themselves to pay customers, then what will you do? Okay? So like you pointed out, I remember the first time we had this thing at a very, very scattering intensity was during the time we were exchanging the old Naira, okay?
Right.
Yes, that was the time.
Naira redesign period. Right.
Yeah, okay? And we thought that by the time we are now using both the old and the new side by side, that the pressure will go down. But instead of it going down, it's even increasing. And now that we are approaching the Yuletide season, if something is not done, okay, then it will get worse. And let me even tell you up front, many agents, because they are finding it very difficult to access cash, they are now planning to even increase the price of withdrawals at the POS agent location.
And I'm just wondering how much more consumers can take at this point.
That is it. Like I said from the beginning, the final, the incidence of all these things is on the final, the customers, the bank customers, the final consumers. Okay? And why there is need for agents to think of increasing the cost of transactions, that is particularly withdrawals.
But how much do you think these transactions could go up by?
Anyway, you know that for a long time now, the cost of withdrawals is relatively constant. It has not gone up in most places. At least I can tell you, in Lagos State and in some other rural locations. It has been like if you want to withdraw 5,000 naira, just 100 naira. In some places, a little less than that. If you want to withdraw 10,000 naira, just 150, mostly, at most, 200 naira, okay? It has not gone up. And then a lot of things have gone up. The price of basic food, price of fuel, a lot of things, even everything has gone up. So, yet agents are struggling to still, be able to service their customers. But now, instead of having certain things within our disposal, like cash, for us to at least, if you can access cash, you can easily give it. But now, sometimes you have to pay. What I mean by pay is, you look at transportation, then when you source the cash, sometimes you need to find a way to make sure that the person that is giving you cash will continue to give you cash. So all these things add up to increase the cost to serve. And agents are in business to make profits, of course, So that is it.
It's quite interesting how cash has become a commodity.
It's really
I wonder if I've seen this happen, in any other country, but definitely I'll do some more research. But talk to me about most of these, your report now, talking about, fraud in the banking system and how some agents are also being used.
Exactly.
With this.
Anyway, the figure you mentioned earlier, I think is 42.6 billion.
Right. 42.6 billion loss.
For fraud at agent locations, if you compare it with the previous quarter, it actually came down. But the ones that actually shot up the figure were actually fraud committed in bank locations, including check fraud, including web, cyber fraud, and then some frauds that are associated with just the bank staff themselves, scattering away money, because we saw that a lot during the time I was there. Okay, but for fraud that are associated with agent locations, if you check from the previous quarter, it actually came down. Okay, then frauds associated with card-related frauds, and then mobile-related fraud. These are basic fraud that you can see at agent location. There's some other thing could be all these kidnappers trying to cash out using the POS at agent locations. Okay, so we have really tried so much as an association in our awareness and advocacy, trying to talk to the agents, trying to reach out to them, trying to tell them. If you check, some of us are even in the social media trying to do videos to enlighten agents about the tricks of these fraudsters, trying to make them, because there are places you go to, you will even discover that some of the agents are stark illiterates. Some of the agents cannot read and write. They have just been taught to use some of the equipment like POS and some of those devices, okay? So the fraud in agent locations can only come down and keep coming down if we continue the awareness and the advocacy and the financial literacy and all that, okay? So then talking about fraud generally, I think it's not only something that can be solved at agent location alone. I think both the CBN, the banks, the fintechs, all the key stakeholders, including the law enforcement, particularly, they are very key. Because there is something we have done as an association in Amban. So we came up with an idea that we called the JTF, the Joint Task Force. And the idea behind that Joint Task Force is to team up, collaborate with the law enforcement agencies in order to give them financial intelligence concerning our own constituency, which is the POS operators, okay? So when we have information about intending fraudsters trying to operate or anything related to that, we quickly bring in the law enforcement so that they can take action, okay? Then I think that collaboration should also be extended to some other key stakeholders within the financial system, because agents alone don't have the capacity to completely fight fraud. If you look at that figure, 42-point-something
That's
billion,
a lot of money.
That's a lot of money.
That have gone into
in just
maybe,
one quarter.
Funding your business.
It's a whole lot of money.
Right.
Yeah.
All right. So much to unpack there. Definitely. And we're hoping this Yuletide season, we all have access to cash.
Exactly. Exactly.
Point,
and we, on our own, we are making plans as well, and we are equally reaching out to make sure that we have access.
And hopefully POS charges don't go up. Hopefully.
Yeah, we are working on that. But there is an extent to which we can go. Okay? So the best thing that can happen is for the central bank and the money deposit banks to make sure that at least there is reasonable amount of cash in circulation so that agents can work. But when we struggle to access cash and we spend so much money to make it available, of course, the price will go.
Because we're all in it.
But I can assure you that it will just maybe marginally. And not in all locations.
Okay.
Yes.
We'll definitely be looking out for that. But thank you so much. It was great having your perspective. Dr. Obio Haote, Acting President, Association of Mobile Money and Bank Agents in Nigeria. Thank you so much for coming.
Thank you. Thank you so much.
All right, we'll take a break. That way we come back, we'll head straight to markets. That's in a moment. Just stay with us. Welcome back. Well, let's get a sense of what's playing out in the markets and the local bourse and for global markets that we track. And we're to edit with the details. And definitely, we see the NGX able to start off bullish. That's for the week. But what's it looking like at intraday?
Well, Ladi, good afternoon here. It's actually, I'll call it a pullback. Because yesterday, the market gained about 83.47 billion naira, which you were on the market. And then year-to-date so far is still negative territory, 0.3%. And then year-to-date is 30.22%. And month-to-date is
still in profit year-to-date.
Yeah, but yeah, there's still profits. Month-to-date, well, the month is just about some 12 days.
Yeah,
November.
the month not looking so good. But
not looking so good.
Not in November to remember, but maybe towards the end. We'll find out.
Well, you just might say, because the likes of Aradel, the likes of so many other bellwether stocks might, make that happen. But of course, well, the market, November is still somewhere not too unpredictable. December is where you always look out for that Santa rally.
Santa rally.
Whether the market will be able to maintain
the Santa rally.
Exactly.
A lot to look out for.
Just a couple of days from now.
Right.
Okay, but let's take a look at what the board tells us for intraday market numbers. All across the market, the markets all across major parts of the world, starting from Africa here, we see the NGX in the red, the NGX as well as the JS, the Johannesburg Stock Exchange, all-share index 0.92% for the Johannesburg Stock Exchange, while for the Nigerian Stock Exchange, it's 0.08%, which is coming back from the just a mild gain that we had yesterday. And then, of course, we see the likes of Aradel had made the market, and 23 other advances had made the market to close Monday's trading session in the positive side. And then starting off the week positive. But at intraday, the market is very much in the red zone. Of course, by 2:30, we would see the clearer picture if this level would be, if this color would still be what it is, or maybe it would turn in the green, and that's on the bullish side, or maybe on the bearish side of the market. Now, on the two other sides of the market, we see EGX 30, all the markets here in the red, 0.28% for the EGX 30 at 31,532.46, while the Nairobi Stock Exchange for the close of Monday's trading session, 0.46% in the red, 115.06 points for that index market. Now, let's take a look at the Middle Eastern market. It's also a flurry of red. Mostly red for the markets, except for the Dubai index, which was up by 0.83%, 4,691.22 for the Dubai index on the United Arab Emirates. And still with the United Arab Emirates, the Abu Dhabi intraday numbers down by 0.12%, 9,424.45 for that market. And of course, the market is looking at the geopolitical issues there. We also look at the oil market, oil market, where we see oil prices are still slightly changed. Then OPEC, the markets are waiting that OPEC will release the monthly oil market report for October, which is due out later today. So the markets are all out looking out for that, as well as the post-election rally, which came after U.S. President-elect Donald Trump will return to the White House. Of course, that will be on January the 20th. But so far, the markets across the Middle East were in the red, 0.07% for the Saudi Arabia's Tadawul, 12,097.75, while the Qatari Stock Exchange for the intraday market numbers, almost more than 1%, 1.38% down at intraday 10,458.21 for that market. And so let's come back to the home front and talk about the domestic stock market. And of course, let's review a little bit of Monday's activity. And we have equity market trader as well as analyst with Ebian Quest to tell us more about this. Abiodun Adedotun, I'm sure you were there. Can you give us details about Monday's trading activities? We saw Aradel and so many other market movers print on the market, the positive. Give us details about this.
Yeah, good afternoon, Victor. Good to be here again. Yes, of course, Aradel led its way again yesterday's trading session, and I think it's in tandem with the positive movement we've seen. I think it's about 3 consecutive days of positive movement in Aradel. If you recall, Aradel had sunk significantly post-listing early in October, so we can probably turn this to recovery, because, of course, the stock has gone deep into the oversold region, and investors are trying to do some form of cherry picking. So it's also important to state that the stock is trying to find its optimum price discovery right now. So there's still a bit of here and there going on in Aradel.
Okay, so Abiodun, I'm going to talk a little bit about Nigeria, but not really on the market, but this time it's talking about the ABSA report, ABSA Financial Markets Index ranking, which we'll be seeing very much. There you see it on our screen there. Nigeria's overall score has dropped. It dropped to about 64 against them. So it has placed Nigeria behind South Africa and Mauritius. South Africa is currently #1 there, 87, while Mauritius is 77, and that's according to this latest ranking of ABSA's Financial Market Report. And they're also putting this on the back of high inflation and foreign exchange shortages. Inflation will be out, and then of course, but how is it? What does it interpret for Nigeria's stock markets?
Of course, it speaks not just to Nigerian stock market. It speaks to what's happening in the economy in general, right? Higher inflation coupled with high unemployment is more like a state of stagflation, and it could mean things on either side. On one side, it could be a good thing because technically it shows that the cost of doing business and labor should be cheaper in Nigeria, because Nigeria is cheaper. You bring your $10,000, $100,000, $1 million to Nigeria, it becomes a lot of naira for you to be able to get some form of profitability. But of course, it also could also indicate that the government is not yet right there in terms of policy coercion, both on the fiscal and on the monetary side. But these factors have already been priced in the local equities market, because you'd see that asset repricing would happen when you have excessive inflationary pressures, and you see what's happened in the banking sector, wherein the banks have made a lot of kill right now, and you see that the way they are trading this year, it's a lot better in terms of pricing than the way they were trading in the corresponding period last year among the banks. So, and for companies that have not really done well, of course, you'd see some form of adjustment in terms of pricing. So pretty much these numbers have been priced into the Nigerian markets.
Okay, so speaking about the markets, especially at intraday, can you tell us what the intraday market numbers are, how they're moving, and then what sector is in focus?
Okay, intraday the markets were fairly flat. It just dropped about 10 basis points. Nestle is the biggest decliner alongside O&O. You know, O&O was released for active trading after it was suspended for a few sessions for non-compliance to the listing rule of the NGX. But of course, they released an impressive H1 2024. I think a lot still beg for question from investors, and I think that's why the stock is still trading at where it is right now. In terms of Nestle, the story is there. The FX Wahala, just as it is eating Nestle, what's happening in MTN and things like that. Companies that have exposure to FX is not really looking so good. So I think that's what's affecting Nestle currently. But on the bright side as well, you see companies like Transcorp, UBA. UBA, of course, is inch up closer to its right price, which was listed last week at 35 naira. The stock is currently trading, I think, around 31.70 or thereabout currently. And Transcorp 2 also is looking a little bit. So this, a few companies have been able to claw in some gains. Nestle is one of the heavyweight stock on the NGX. So a few companies have been able to catch up some gains on what is being lost in Nestle. So I expect the market to close about flat today.
A flattish close. Okay, so we'll look out for that flattish close on your forecast, and I hope it goes in the green, maybe for the side of gainers. But thank you so much for your analysis on our show. Abiodun Adedotun, equity trader and analyst with FBN Quest for the market numbers at intraday. Okay, now let's talk about U.S. markets. U.S. markets, the stock futures are also in the red, no thanks to cautious trading by investors there. And this is coming after the market had recorded some rally. That rally had come all the way from last week, where everyone was talking about U.S. President-elect Donald Trump, making a comeback into the market. And of course, that also it's affected the cryptocurrencies market, Ladi, which you also always
so much playing out in those markets. But looking at Ardell Holdings, I'm just wondering, is it time to are investors buying the dip at this point? But I guess we'll definitely find out to see how it closes. That's today. Thank you so much, Anita, for giving us those details there for most of the markets that we track. But let's take it on to the UK now. I'll have some data, again, out in the UK, and we have Juliana to break it down for us. Great to have you, Juliana. So we're seeing UK grocery price inflation, that's up. Supermarket sales, that's hit a 2024 high. And this is coming at a time when we're seeing the inflation target for the BOE below the inflation target. That's looking at inflation by 1.7%. So it's quite interesting. The consumers are not feeling it, at the stores.
Yeah, that's absolutely right. Good afternoon, Laddie. We have had some interesting data from Kantar, which is a market research firm which specifically looks at consumer shopping habits in the UK. And as you quite rightly said, it's been a bumper year for grocers in the UK, particularly the big four, Tesco, Asda, Morrison and Sainsbury's. They've had their best year in 4 years, and that's because people are shopping more frequently. I think it's because households are trying to look at their bills and trying their best to minimise them. So the big shop that most people do at the end of the week, I think a lot of consumers now are just dipping in and out of the supermarket as and when they need the food. And one of the reasons could be shop price inflation, which, as you quite rightly said at the top, has increased month on month. So the data that Kantar released this morning is looking at the 4 weeks to November the 3rd, and shop prices inflation is up 2.3%, and this is compared to 2% in the previous month. Now, it is on lots of sugary foods, so soda, chocolates, sweets, all very expensive. Perhaps this has got something to do with Halloween, celebrated quite widely here in the UK. But I suppose there is a broader story here, and that's looking at the raw materials cost, supply chain issues, and a shift in consumer purchasing habits, right? That is what appears to be the reason. But it is showing a slight concern, because we are looking forward to Christmas. I think this is the second time this week I've mentioned Christmas, laddie. It's only 6 weeks away. And we know that, of course, a lot of people are going to be spending a lot of money. You want to bring your family around. You are going to be spending money at the checkout. But if prices are increasing like this, not great. There is a saying about, look after the pennies and the pounds will look after itself. So 0.3% may not seem like a big increase, but it is, particularly those who are still struggling. The cost of living crisis still very much alive and well in the UK, especially over those some of those reforms that the Chancellor Rachel Reeves pushed through, pension reforms. So yeah, not great reading in the run up to Christmas, but great for the grocers who have had a smashing year.
Yeah, and with high inflation, you want to have a job and you want your wage to actually grow. But we're seeing UK unemployment, that's risen with regular wage growth, slowing.
Yeah, it's quite interesting. Again, another interesting set of data. It appears as if there are cracks beginning to show in the UK labour market. So the Office for National Statistics has been looking at the labour market for the UK in the month of September and October. And it is quite interesting because, of course, we know that the Labour government are very firmly in power at the moment, so there are no excuses. Rachel Reeves, Sir Keir Starmer, who's currently in Baku, actually, he's just finished a live press conference at COP. They cannot blame the Conservative Party, and it has shown, this data, that unemployment is creeping up. It's now at 4.3%. I discussed this with you on your show yesterday, Laddie, and I think the markets had priced in a 4.1% unemployment rate. It's come in much higher than that. And also wage growth is slowing. It excludes bonuses. But, what does this say? What does this spell? How healthy is the UK economy? We know we've gone through a period of stagnation. One of the reasons why there were £44 billion worth of tax hikes in that fiscal document that was read out a couple of weeks ago is that the Labour Party want to invest, and they've got to find money to invest. And for them, according to Bretton Woods as well, if you invest, then your economy will grow. But we're not yet seeing those signs of economic growth, and the fact that more people are now unemployed than they were during the Conservative Party, and wage growth is beginning to decline. It does spell some fear. We did have an interest rate fall from 0.25% last week when the Monetary Policy Committee met of the Bank of England. Suggestions that perhaps because we are starting to see wage growth slowing, that there won't be a further rate cut at the end of this year. But, it does appear that a lot of companies in the UK are beginning to get rid of staff. We spoke about that motor insurance company yesterday. They were getting rid of about 550 staff. And we've been seeing it. We've been talking about it and reporting about it every month in the UK. So again, I think it's important to say 4.3%, if you compare it to some places where they're in their late high 20s. This is still universally low, but worrying. And I'm sure a bit of headache for Rachel Reeves, the Chancellor.
Right, but how are the markets looking? Are UK investors feeling the euphoria of a new high for Bitcoin?
We haven't, although it's pretty phenomenal, isn't it? I think I read that Bitcoin is nearing $90,000, which is phenomenal. That hasn't creeped into the market. I think the markets in the UK are still digesting that pretty worrisome labour market data. So red is the colour today, as you can see. The all shares down 0.81%. The FTSE 100 blue chip down by 0.85%. And the FTSE 250, the domestic market laddie, that's also down by 0.74% at intraday. In the currencies market, the British pound is currently trading down too against the US dollar by 0.39%, down against the euro by 0.01%, and down against the Japanese yen by 0.03%. So a full house, down, 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 down.
Down, down, down. I guess the US dollar is still rallying there, but thank you so much, Julian, for giving us the details right there from the UK. All right, take it on to Europe now. See, Germans are known to be on time, at least that's the stereotype. In real life, however, things look quite different, and especially So when Germans are traveling by rail. Lars Holter is with DW and brings us the details now. So talk to me, Lars, about this rail service. How bad is it?
Thanks for having me, Ladi. Well, from personal experience, I can actually say that I did take a train pretty much through all of Germany just last week, and I did arrive in Berlin on time. However, the train was totally overcrowded, and even worse, my train was a bit of the exception indeed. I have been on many trains over the past few years that have been delayed not only by a few minutes, but by up to 2 hours. The Deutsche Bahn being famous for its delays and its inability to meet its schedule. Now, a part of that is because the company has long failed to invest. And as it does that now, it's been hitting a bit of a snag. Deutsche Bahn had been looking for a supplier for its next generation intercity trains, the so-called ICE 5, and nobody actually responded to the call. Now, there aren't too many companies able to make those trains, of course. There's pretty much Siemens and Alstom, but they haven't put in a bid for the trains that were expected to be 400 meters long with room for 1,000 passengers. They were meant to go at least as fast as 300 kilometers an hour and offer level boarding. And that's all not unheard of, but it's tricky to do for many technical reasons. For now, Deutsche Bahn has rescinded its procurement.
So no new trains for now, but are the old ones good enough for a while?
They certainly are, especially since the company has invested a lot more in recent years. So as unfortunate as this all sounds, it's quite okay and the company doesn't seem to be in much of a panic, but that might also be due to the fact that they know that trains are not their only problem, probably not even their main problem. That would be the tracks, the infrastructure on the ground. 1,500 kilometers are in need of urgent repair and renovation. There are thousands of bridges that need to be fixed. And there's a lot more tracks needed. 20 years ago, Deutsche Bahn took out a lot of tracks thinking they could save money that way. And then they realized that they actually needed them for an overdue expansion of service. Now, it's going to take years to put it all back together, and with not enough tracks, often no parallel tracks for trains to pass, it's difficult to keep a schedule because one train with a problem actually affects the punctuality of all the other trains on the route if they're not able to pass. So the company certainly has its work cut out.
All right, what are investors looking at in today's market?
Well, a bunch of numbers. Again, more DAX companies are coming out with their quarterly reports, and they're not all good. Bayer says their profit dropped on weakness in their agricultural business. That's been a problem for a while and will be, as the company is also cutting its forecast for next year. Also getting numbers from German chipmaker Infineon. Also not great, as the company is struggling with weak demand from the auto sector. The auto sector obviously being a main client for chips these days, as cars are adding more tech like driving assistant and safety programs. So there's a few things for investors to chew on. I guess taking our minds off our daily worries about the troubles within the government in Berlin.
All right, thank you so much. That was Lars Holter giving us details right there in Europe. All right, to other matters now. See, in 2023, the average price of generic smartphones, as basic smartphones, is 39,000 naira, which has surged by 186% to 111,000 naira in 2024. For the branded smartphones, I would say the average price moved from 1.3 million in 2023 to around 2.5 million naira in 2024. This increase has, however, failed to make a significant decrease in demand for smartphones. Quite interesting. Join us now is Osuji Chideberes, analyst, financial derivatives company. Great to have you on the show.
Thank you very much for having me.
So we're seeing these high prices, but demand for smartphones are still strong in Nigeria. What's driving that?
Well, the high prices, you would say it's the exchange rate, right? So you see how it has moved from last year to this year, right? That's moving it. And then when you look at the increment in the components used to make these phones, you look, for example, now last year you could see 4G phones, right? And now you're looking at 5G phones this year. So you could imagine the cost of making a 5G phone would be more. And then you look at other innovations in the tech space, and just for the phones, all these drive the cost. Another is the specific status of some phones, the brands, right? I mean, you see somebody with an iPhone 16 Pro Max, and you're like, oh, that's image you want from the brand. So all these drive the prices for, the smartphone company in general.
So I guess, regardless of the price, Nigerians are still finding a way to buy most of these expensive smartphones, even with the cost of living crisis.
Yes, so please come again with the question.
No, I said regardless of the cost of living crisis and the phones, so high, when you look at the price, Nigerians are still managing to buy these high-end phones?
Yes. So how they're going to, let me say, get with this is the opportunities, because companies provide budget phones, right? And how they'll be able to get with this is why they're getting the budget phones. There are platforms that help with this system. It's called Buy Now, Pay Later. You've seen CDK, you've seen Easy Buy, right? So this is how we get to keep up with it. And for the budget phones being released, companies try to cut costs by the materials, the build of the phone. All this together just at least helps the average Nigerian who is being pressured by lower purchasing power to still be able to afford smartphones in these times.
Chidebere, that might be why I've not changed my phone for so many years. But thank you so much. That was Osuji Chidebere, analyst at Financial Derivatives Company. Thank you so much for coming on.
You're welcome.
All righty then. So let's get a check on what's playing out in the market. We see it's deep green with Bitcoin still holding on. And yeah, it was close to $90,000 earlier, but we're seeing, maybe some profit taking at this point. Few pockets of red in the market, but deep green with Ethereum and most of the top altcoins in the market. Let's look at the headlines right there in the crypto space. We'll see the crypto market cap there topping $3.1 trillion. Yeah, it started the year about $1.6 trillion starting the year, but we see the total crypto market cap now crossing $3 trillion, and that's another milestone in the market. We know the likes of Michael Saylor, with his company buying a staggering 27,000 Bitcoins at this time. So I guess there's that bullish euphoria right in the market. Then BTC ETF volumes, that's hit a multi-month high with Bitcoin ETFs hitting about $7 billion in trading volume. So I guess that's what you see in a bullish market. We see the ETFs, the volume rises, but when there's a downturn, you see outflows, from the ETFs. Well, let's talk to Element Damble, now co-founder, Savio AI, joining me via Zoom. Great to have you on the show, Element.
Oh, hey, Lottie, thanks for having me.
Yes, it's been quite a while. It's great to see you again. But first of all, did you see this coming for Bitcoin near $90,000? Did the charts ever whisper that to you?
Yeah, to be honest, I think what we're seeing is a move to a key resistance point in terms of the monthly RSI. So typically what we expect, and to be honest, I think a lot of people expected Bitcoin to probably hit six figures in 2025. And regardless of who won, of course, with Trump, the Trump trade has definitely come to fruition. And I think just the prospect of a calmer regulatory environment has definitely helped propel Bitcoin to this level sooner than expected.
Right, and definitely there must be key levels to watch. Now, I know you watch all of these levels. What's it looking like, to the top and maybe, on the resistance? Because now I guess we're in price discovery at this point.
Yeah, again, just to reference the RSI again. So at the moment it's trading at around 72, 73, and there is a resistance level at 75. So we're already seeing, like you mentioned earlier, a lot of profit taking starting to happen. I still feel we haven't reached the top of this cycle. I do believe you're probably looking at 95, probably 105K around that range as the top. And then you might have some consolidation for a few months before the next high thereafter.
Right, and do you see this, happening in a straight line all the way to 105,000, if that happens?
Absolutely not. I think typically what you see, again, you have streaks of higher highs. So now you're seeing some profit taking. And again, the majority of people trading now are more of the institutional side. So we really haven't seen retail volume come in as of yet. So as the news cycle continues to propel the storyline of Trump and Bitcoin, that's when you're going to see further waves come in. But you're going to see some some choppiness, some volatility in the interim period.
Right, but I'm sure some bears are looking for an opportunity to short this market. Where do you see that happening soon, or just forget about shorts for now?
Yeah, absolutely. I do still see bears potentially coming in again because, just call it what it is, the price is significantly overbought in the short term. So bears are absolutely circling, and I believe if you're looking on the monthly candle again, if it hit, it will probably hit that 73 level on the RSI. If it fails to pass that, that's when you're probably going to see history repeat itself, because bears historically sell at that level.
Right, we'll definitely look out for that. Thank you so much, Aliman Dambo, co-founder Savio AI. Thank you.
Cheers, thank you.
All right, so that's how much of markets we track, looking today. It's still a really hot market in the crypto space, but we'll definitely be tracking other markets same time tomorrow. Thank you so much for watching. We can watch this again on our YouTube channel. Let's flip over to YouTube, set for Channels Television. You can watch all our production. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.